What's going on, everybody? Joshua Salvetti. Welcome back to another amazing lesson by the High Performance Trader. Today, I need to address a topic that most traders struggle with, right? And if you're anything like me, you struggle with this for a very, very long time. And getting over this hump just may be the main thing that leads you to becoming a consistently profitable trader. What is it? How to hold on to your winning trades, right? I know this topic's crazy because most people, when they think about trading, right, they think greed, right? They think people hold on for too long, right? And though that is also an issue that what we're going to go over today will address as well, one of the main issues I used to struggle with was actually holding on to my winning trades, right? This is also another form of greed, right? We don't want to give any money back that we just made, right? We want to hold on to the money we made. And honestly, I don't think it's all about the money. I think it's a lot about ego. I think it's a lot about being right? Because how many traders, right, used to go through that feeling, right? When they're wrong, they feel low. They feel like they're shameful, guilty. They feel like they've been betrayed, right? They take it personal, not realizing that they are actually manifesting their fears in the market. See, the market is literally its own patterns, its own universe, its own energy, right? You have buyers, you have sellers coming in and out of the market at specific times, specific levels, right? But in reality, the market just generates opportunity, right? All it does is generate opportunity. Once we get in trades, we then tie our emotional well-being and our worth to winning and losing trades. What does this mean? This means if you're long and the market goes short, you start to panic, you start to feel threatened, you start to feel fear, doubt, right? And all these super negative emotions that are going to lead you to mind freeze, not being able to get out of the trade, or getting out of your trade too fast, or just taking profits to avoid these feelings, right? So see, notice this is not just a numbers game. This is a mental game as well, right? I'm sure a lot of you guys already know that. But today in this lesson, it's my goal to give you the knowledge and the understanding, the perception, right? That's going to help you learn to hold trades longer and not take things so personal in the market, right? So before we go any further, guys, if you like my content, right, and you really appreciate what it is I offer, the value, everything that entails, make sure you hit a like, subscribe for more content, right? And guys, not only that, if you want to get involved with a super skilled team, right, that puts in the work every single day, that address all the behavioral science, the mental game, right? We address everything in the market, beliefs, strategy, everything it takes to become consistent, guys. Hit the links below. Get involved with the High Performance Trader Discord. Guys, we are building, right? We've been around for 8 months. We are growing extensively. We are super effective. We trade very well. Process over profits. Give it a shot, right? Hit the links below, guys. But without any further ado, we got a lot to cover today, right? So my goal, once again, is to get you to the point where you can enter a trade and stay in the trade for as long as you like, right? Not as long as you like, but for as long as the market tells you. What does this mean? You must have the correct understanding of price action, of what it looks like, right? When price is bearish, say you're short, what do you need to look for to understand sellers are still in control, right? Because once again, we can't move the market. The banks do. So we are not in control of anything. It's not up to us to understand or to move the price. It's up to us to stay in the trade until price snaps, right? Or price breaks. What does it break? Structure, right? So that's what we're going to be going through today. We're going to be breaking down structure, why it's so important, why you need to be able to understand it, what you need to look for, right? And the knowledge and the psychological aspect that goes behind it. So the next time you are presented with a scenario where you want to exit a trade, you will go, hey, let me try something new here, right? And then once you do try something new, your life just may change. So before we go any further, we got a chart up over here, the S&P 500 or SPY, right? This is one of the instruments I trade, right? So before we go any further, what I want to do is identify my critical levels, right? And I have tons of other videos on this. I'm not going to spend a lot of time on this, right? But what critical levels do is help me understand I don't know what's going to play out. All I know is price is going to touch one of my levels and give me a signal, right? It's going to paint two different scenarios, a bearish scenario or a bullish scenario. based on the chart pattern that occurs around my critical level, right? So let me show you. So real quick, let me just label right here. This is previous day low, right? This is one of our main critical levels, right? So previous day low, we have end of day, right? And then we also have A, and we also have previous day high, right? So I'm not going to go through right now how I identify my critical levels and this, that, and the third, because that's going to take a lot of time. If you guys are interested in figuring out why these levels are so important to me and how I find them and what I look for off them, go to my page, subscribe, and check out some more videos, right? It's super valuable stuff. It's going to change your life. Right? But basically, in a nutshell, guys, when the market looks like this, let me get rid of that average true range there. Okay, so when the market looks like this, we have no idea what's going to happen, right? And basically, in a nutshell, my pre-market plan will always highlight a specific level, and what happens at that level, I'm going to trade off that level, right? So basically, what I'm saying over here is 435 is going to be a critical level. Whatever happens off 435 is going to paint a picture for either bullish price action or bearish price action, right? Once again, we don't know what's going to happen, but all we need to know is we just need to be able to understand what we're looking at when it does happen, right? This is why we use critical levels, because whatever happens at these levels is going to paint a picture for bearish or bullish market scenarios, and then we're going to put on bearish or bullish plays, which are more higher probability with low risk. Okay, so once again, these levels are met for entries, they're met for exits, they're met for targets, right? Meaning, you enter at one of these levels, you then target another level. This is what we call a market imbalance. You need to have a general understanding of this, because going forward, if you just are entering at end of day and you're taking profits extremely quickly, right? Just because you're up 40, 50% and you're referring back to your old program, right? Which is telling you, hey, you're up 30, 40%. I want you to feel good today. For you to feel good, you must take your profits right now, right? This way you avoid feeling less than, feeling shameful, feeling guilty, feeling betrayed, right? We don't want to feel that way. And since we humans, traders, associate, right, winning with feeling good and losing with feeling bad, we are always going to try to avoid these scenarios. How do we avoid these scenarios? By taking profits at 20, 30%, right? Now, what happens here is once you take your profits, right? Let me just show you. So say you went short over here at 435, right? This is the trade we took on the Discord. And say you just took the first, right? So the way this trade worked is it literally sold off. If you went short here at 435, you would have took profits like right on the first 6 minutes, locking in probably around 60 or 45%, right? This was like $1.25, right? So once again, all options traders out there, a dollar move on the S&P 500 is going to make you around 50 to 60%. So a lot of traders will capture these quick little scalps, boom, and make 50, 60% and be like, dude, I killed it today. 50% return? Ain't no one else making that, I know, right? 50% a day keeps the doctor away, the financial doctor, right? Like if I can make 50% ROI every single day, I'll make bank. Yes, that is true. But you're trading based on emotion. Now, what happens is if you're trading based on emotion, you're never going to reach consistency. It just doesn't work. I tried it for years. Listen, I used to be the king at 40, 50, 60% moves. I could knock them out all day. But the thing is I was always taking profits on emotion. Now, what happens is if you take profits on emotion even once, your brain is programmed to act on your emotion. So then you're going to see way worse trades. You're not going to see as much consistency, right? Because the market is you're going to be a slave to your emotions, right? So the goal here is to lose is to not be a slave to how you feel. Instead, you must gain back your free will. You must understand, hey, I'm in control of my body. I'm in control of my decisions, and I'm in control of this guy up here, my brain. And just because I want to take profits right here, I know through journaling, right, and extensive trading, because I've been trading for a very long time. I'm sure a lot of you have as well. And you guys know if how often does price literally go all the way down to pre-market low, at least, right? Or at least to end of day, right? Or at least to previous day low, right? We're all aware of what the market imbalance is. If not, click some of my videos below. It explains it very well. But basically, in a nutshell, the market imbalance is the space or the price action between critical level to critical level. So in this case, it would at least be from 435 to end of day, and then to pre-market low, and then to previous day low. This is what we call the market imbalance. Why is it an imbalance? Because there's a higher there's a higher amount of supply than there is demand right here. And until price comes into a level where there's higher demand than supply, you will be in a market imbalance, right? So it's the space between. So I traded for like 3-4 years before I after logging for years. Because what I would do is I would take this trade and I would be like, oh, great trade, made 40-50%. And then I would be like, dude, I left out so much money. I literally bought my options for 100, sold them for 150, 50%, killed it. But then they would always end up being worth $400, $500 a pop. So, and listen, not to make this about the money, but I wasn't trading my process properly, because if I was, I wouldn't be getting out on emotion, right? Once again, we don't want to be slaves to our program. We want to rewrite our program. Okay, Josh, sounds good. How? How do I rewrite my brain to stay in these trades longer, right? I'm sure a lot of you are asking. It's knowledge, right? It's knowledge. It's understanding, right, what structure is. See, structure is the way price moves. Structure is healthy price action going up, right? Let me show you. So structure is going to be the break and retest all the way to the downside, right? Now let's break that down. So you enter the trade here. This right here was the previous support up here at 43425. So what I'm going to do here is whip up the 5-minute, because if you're entering any trades and you're not using the 5-minute, it's going to get extremely choppy, right? So structure is what happens, right? So let's just break down what bullish structure looks like here. So we have a higher high, higher low, right? It looks something like this. Higher high, higher low, higher high, higher low, higher high. Now is when we need the higher low, at least above 43539, right? Everybody knows how to identify a trend, right? So this would be bullish structure if and when buyers held this, and it looks like they tried to, right? This is bullish. Now, bam, break of structure. Structure just broke. But we came into a 43508, so this is still relatively bullish, right? Okay. Bam. We just shattered through 435, right? So now bullish structure, which looked like this is what we call regular price movement to the upside, right? Was just broken. Boom. So now when I come up for that retest in this level, this is my area to go short. Now why? Because my stop loss is literally pennies above, so I'm only risking, 5% to make a beautiful, healthy amount of money. So now we enter the trade short. Okay. Based on structure, right, Josh? How do you stay in this trade? So first of all, my first target in this scenario would be at least end of day. Now, how do I know it's going to go to end of day? You don't. You have no clue. That's the beauty of it, right? But all you can do is stay in the trade until structure breaks, right? We have just formed bearish structure. We've broken, and now we've coming up for the retest at 43428, and then we sold off right in the end of day, right? Now, okay, we hit target. Why don't you take profit? Because structure still hasn't broke, right? Now, what is structure in this scenario? I'll show you. So the market looks something like this, right? And we just came into end of day. But I am using, at this point, this previous support, which is now resistance at 43423, right? And until that price snaps, I'm staying in the trade, right? Boom, we snap through end of day. Okay, so what's our next target? Our next target is pre-market low over here, right? So the market looks something like this now. And now we sink. Now check this out, guys. And this is, hold on, let me see. TOS is acting funny. Look at, we're sinking through previous supports. This is adding to the bearish structure. So you see how when we're going up, we identify these levels and we need to see them defended bullishly. Bullish break and retest, right? Bullish structure. Now, as price snaps structure, we then go short with our lower side targets in mind, right? Which is end of day 43374, 43298, 43227, right? These are our bearish targets. Price snaps end of day, snaps this pre-market level, comes up for a retest, beautiful spot to enter or add to your position. Instead of getting out, we are looking to add to positions, right? This is how you're going to get the results of the professionals, right? This is how the professionals trade, right? This isn't just quick scalping, right? Everyone wants to be a scalper, not because of the money, but because it increases the amount of times they're right. See me? I don't want to be a scalper. I want to be a trend trader. I want to capture this whole move to the downside. Why? Because now I only have to put on a much smaller amount of risk, right? I don't need to trade 100 contracts to make tons of money, right? So now in this scenario, you don't get out of your trade until structure breaks over here at 43298, right? So you see how structure is not only keeping us in the trade, right? But it's actually telling us, it's giving us awareness of who is currently in control of the market. This is what I call present moment price action, right? This is what I call identifying and adapting to market conditions, right? You must understand structure, who's in control, right? What's the market telling me, right? Are we holding below previous supports? Okay, if so, I'm staying in the trade, targeting the next level, right? Boom. And we break right past all the way through 43227. And then this is where I would get out of the trade. Once structure was broke, bam, out of the trade. Now, I know this seems very hard and it seems like, yeah, Josh, okay, yeah, it's easy because, you've been whatever, guys. But you must try something new. If you ever want to experience different results, right? Say you're in that rut and you just continuously, you can't hold on to trades that long. You're getting out of winners way too fast. You're not consistent. Or maybe you are, but you just want to see better results. Guys, structure is going to be your best friend. I've used every indicator out there. I've tried every strategy, and none work as good and as easy as structure, right? Bring it back to the basics, guys. Higher highs, higher lows. And lower your size. If you usually trade 5 contracts, trade 1. Master it. If you can master trading structure on low size, you're going to program your brain. You're going to rewire it for long-term success, right? So that wraps it up for the video, guys. Hit a like, subscribe for more content, get involved with the team, drop comments below. I'll see you in the next lesson.